TikTok is live. So we got TikTok, and then what about Instagram? You let me know when Instagram's ready to rock. We are live here, but we're waiting for IG.
Let's see, IG looks like it's ready.
There we go. IG's ready. All right, folks. Welcome back to another week of What the F Happened. Any of you been paying attention? I know it's summertime. Matter of fact, it's Revenge 2.0 summer. So what that means is everybody's getting revenge for COVID this summer. Lots of travel, lots of problems with airlines, which we're going to talk about today. But it is definitely no shortage of craziness in the news. Matter of fact, Stephen, I can't even look at the news anymore. I can't pull it up. I was trying to find content for today, and I literally had to go to white papers, and I had to go off of the news because it's so dominated by politics, but not just dominated by politics, dominated by bullshit that isn't even real. It's just complete, in my opinion, misinformation, but I can't say that. TikTok will flag me yet again. But today, we got a lot to talk about. We got to talk about earnings reports coming out. We're going to talk about Ray Dalio's all-weather portfolio and the revisions he made to them in 2024. We're going to talk about Ray Dalio's vision, or what he's talking about, all over the news. And TikTok, don't suppress me. Like, this is Ray Dalio. I have news articles where he's talking about we're very close to a civil war, and also the potential of a world war is 50% or greater. And we're going to talk about that. We're going to look at that. I did a bunch of research last night, but I'll shut up right there. Stephen, what else are we going to talk about on today's? I mean, come on, we could talk about politics and the two candidates, or not candidates, or we don't even know yet who are running.
Well, listen, man, I take one what the F off last week. I took the family down to Key Largo. We boated all week, got a nice suntan, and enjoyed the summer a little bit with everybody else. And in the meantime, there's been Donald Trump was an attempted assassination, which is bizarre when you look at the details on that, and either the massive failures, or was it more? I don't know. The testimony coming out in Congress right now, and the Secret Service director is already resigned, and it's a disaster. But not only that, Chris, but during the time frame, President Joe Biden is no longer the presidential nominee in the 2024 election. So I missed all of this just since the last What the F. So we definitely got to catch up on that. And this resignation of not being the nominee by Biden, oh boy, was this a coup? Was this a little pressure? What's going on there? There's a lot happening in the news. I mean, and I'm prepping up to fly to Buffalo today. As you mentioned, the airlines are a mess. I'm carrying a bag with me. I'm not checking anything. I'm going to be running through there. I'm fingers crossed, because starting tomorrow morning is the first ever private money club inner circle mastermind hosted up in Buffalo at the new office. We're going to be hanging at Chris's house, jet boating, going to baseball games, having a blast with some of our inner circle private money club members. So I'm all in on PMC today. I'm pumped up to fly up to Buffalo later on. Fingers crossed, everybody send positive vibes my way that I make it there on time this evening. But other than that, Chris, what else going on in the news that we'll hit on today?
A lot of other stuff, but we're going to get back to everything, and we're going to get back to what the F happened right after this. All right, folks, we are back at it. We are literally going to be diving deep down the rabbit hole with white papers, with Ray Dalio, and some of his warnings based on the history of this country and just the history of the world as a whole, because that's what he's done so well, is he's looked at the history, and he's sitting there saying, based on where we're at today and what's happening today, these are other periods of time in history where the same type of things were happening. So kind of scary stuff, not trying to scare anybody on here, but definitely want to kind of talk to you, because I mean, the guy does run did Bridgewater Capital, the company that he created and ran for a long time, basically the largest hedge fund in the world. The dude knows a thing or two, and we're going to talk a little bit about him. in the news. We're going to talk about Tesla's shares falling. We're going to hit a lot of things, but what the heck? I don't even want to waste any more time. We are streaming right now, and I want to just say thanks to everybody coming in from TikTok. I want to say hello to everybody over here from Yahoo and not Yahoo, YouTube. What the heck? I got Yahoo up on the screen clearly, but YouTube, Facebook, and also we are streaming live on Instagram. So folks, keep the comments coming in. We're going to be browsing, as I just was talking to Dawn over here on TikTok, and be talking to some folks over here on IG. And then we're definitely rolling in YouTube land. But Stephen, where do we even start today? I mean, I don't even know where to start. And I don't want to make this thing dominated by politics or anything like that. So can we just maybe start with the stock market?
Yeah. Definitely. The stock market. What is that? I completely forget.
Well, the stock market futures right now on the Dow, the S&P, and NASDAQ are all down. So the Dow's down about 144 points. No big deal because the market is so overinflated. And that's where I want to start. I want to come over here and I want to talk. So this TikTok, that's the chart we're looking at. And right over here for everybody else, that's the chart we're looking at. What this chart shows is it shows the S&P 500, and it just shows the S&P 500 consistent with a 0% risk-adjusted 10-year treasury. I don't want to get into all that stuff, but basically what this is saying, and actually, before I get into this, let me ask everybody a question. Like, when you look at the overall stock market, let's just talk about the S&P 500 or the Dow Jones. When you think about it, do you think of a 10% return over a long period of time is a good return? I mean, TikTok, do you think 10%'s good return? How about over here, is 10% a decent long-term return in the stock market? Because most people would say, yes, they would say that is. Now, and that would make sense because right now, the markets, if you were to look at a long period of time, and I'm just trying to figure out where they use this, 10% total returns occurred for most of our adult lifetime is what this white paper is saying. So that's what we've gotten used to. Dividends and the returns in the stock market over a long period of time in our adult lifetime. So pretty much everybody on here, and it doesn't matter what your age is, that's about what you've got used to, is a 10% return with dividends. But if we go back to the generation before ours, 7% with dividends was the average, right? So when you think about returns, and maybe some of you have heard of the rule of 72 or the law of 72, it goes by a couple different things. The law of 72 basically says your money will double every 10 years if it earns 7.2%. And it will double every 10 or every 7.2 years at 10%. So what you're basically looking at is if 10% was the number that you could expect to get out of the return, your money will double every we'll just call it 7 years, right? That's about what we've gotten used to, which is a little different than the past. But here's where things get a little wonky. And this is, I've been talking about this for a long period of time. Some people don't like me talking about it. They don't want to hear the truth because the truth hurts. But we're definitely going to go off a cliff. I mean, I'll just post this again. Like, here's the chart, folks. Like, I spent 16 years as an advisor. I know how to read charts. I used to trade options. I used to read these charts day in and day out. I can do it with my eyes closed. I can run analysis on this, but I just want you to look right here, okay? Do you see this? Okay, do you see this line down here? If we were to basically look at it, that's how far out of whack we are. If 10% is the norm, this is where we're at way up here, and we're coming off those highs a little bit. So the question is when you're looking at returns of a market, what are things that can affect the returns? What are things that can bring a market down? And some people would say, the Fed action. Okay, well, the Fed has raised the interest rates aggressively 525 basis points or 5.25% over the last couple of years. That's aggressive. What else have they done? Well, they've unwound their balance sheet, sucking money out of the markets. Okay, that's another really big thing. What other things can affect it? News, wars definitely can affect the market. But, we don't have any wars here in the U.S., but there's lots of I shouldn't say little, but big things going on out there in the world. I mean, you don't need to look far to see that there is wars brewing, and there is a lot of stuff going on, which we're going to cover in the Ray Dalio section. So all these different things, but let's not rule out how political matters. Political matters definitely can move the markets, right? How about elections? Well, I did a recent YouTube video. So if any of you have seen my YouTube channel, it's at the Chris Naugle. I recently just put up a video where what we did is we looked at the last 5 elections, heavily focused on the last 5 elections where a president, okay, is running for a second term, because that's very similar to what's happening right. Well, shoot, actually, it's not anymore, because the President Biden, is not running for a second term. So this is getting a little wonky, but let's just assume, based on when I did the video, that's what we were looking at, presidents in the second term. Every one of the scenarios showed a trajectory like this, where the markets went up. And you could actually see some of these, and I'm going to call some of these timeframes out, and you'll all remember them. So if the markets are going up, where must they go? Some of you are thinking, oh, well, they must always go up. No, they must go down. What goes up must come down. Folks, we are literally staring down the barrel of an epic balloon, like a bubble, I should say, a balloon, a giantly overinflated balloon, a bubble of proportions that I've never seen in my lifetime. And I was an advisor through the Great Recession. That was a pretty doozy, right? Big bubble in the real estate sector that exploded, and then the whole market's collapsed down. How about the dot-com crash? I was self-employed, owned stores during that. Was not an advisor during that period, but I became an advisor after that period. That was a doozy. That was a 3-year doozy of a recession. Okay, and that was the tech market exploding. How's the tech market looking nowadays? It's way overinflated. Matter of fact, when you look at the S&P 500, it's dominated by tech, dominated by the Magnificent Seven. All I'm trying to explain here and in this white paper is what the markets are doing right now is largely a complete reflection of the unprecedented $11 trillion. And that, so I always talk about 5.2. That's what was printed just in that period of time. But if we expand that time, I've got the numbers now from 2022 to 22, or yeah, I think that's what it is. Anyway, 2020 to 2022. Yeah, it just doesn't even seem like it's possible for just a couple of years. $11 trillion was printed into existence, weakening your dollars, creating the inflation that we have seen and now are coming off of. All of that was created in a 2-year massive printing. Okay, so just remember, $11 trillion. It's actually $27 trillion if we go back to 2008. $27 trillion from 2008 to current, well, actually not even current, but to 2023 was printed into existence. Okay. Just take that all in. What does that do to the markets? Well, that drives the markets to a crazy frenzy. What also drives the markets to a crazy frenzy is, yeah, got to decline you over there, but is elections. And every single time, as I show in that YouTube video, the markets fall off the cliff. They literally go down. Now, this article is showing a lot of factual data and really a lot of good historical comparisons. I don't want to bore you with it, but what they're basically saying is we could see the likes of 1929's Great Depression if we're not careful, I should say. But I don't even know if we're too far gone. And it's more than likely going to start right after the election. So January 2025 could be really rough. And it could be a rough period of time for I don't know how long. So the reason I say this stuff is not to get you worried or anything, but just to get you thinking, like, listen, things don't always go up. They can't always go up. In all these other periods of time referenced in here, they don't always go up. They just don't. You can look at 1929. You can look at 2000. You can look at 2008. You can look at 2021 to 2024. You can look at all of these periods of time. They were all a big bubble right before they collapsed. Folks, we're there. We're there in one of the most insane political environments I've ever seen in my life of 46, almost 47 years. I'll be 47 years old this week. No, wait, next week. Yeah, next week, 28th, whatever. I don't even keep track. So somebody just said over here on TikTok, how do I invest? You invest smart. You invest in things that you know, like, and understand. You switch from a growth mode to a preservation mode. You take all of your invested assets, including 401ks, and you start looking at how do I preserve this money? And how do you preserve money? I mean, listen, I'll just call it out as simple things. And this is not giving investment advice, but I mean, where is your money safe? And some would say, oh, your money's not safe anywhere. But I mean, I don't know. Insurance companies are incredibly safe. Money markets, for the most part, are safer than most other assets. In 401ks, they have things called stable value. And in treasury bonds, U.S. Treasury bonds are relatively stable investments that do very well in economic turmoil, because usually in economic turmoil, the Fed, which they've already said they're going to, decreases rates, which increases Treasury bonds. So that would be some good things to look at. Preservation of principal. And if you are going to invest, please invest in things that you know, like, and understand. Now, let me transition here. And Stephen, can you share, because you've got this, can you share that Ray Dalio all-weather portfolio? So listen, if we're going to literally try to figure out, like, how do we navigate this? Well, then wouldn't it make sense to look at someone like Ray Dalio? And if any of you don't know who Ray Dalio is, all you need to know is he ran a company called Bridgewater Capital. Okay. He's 74 years old now, but he ran a company called Bridgewater Capital, which I'm trying to find the dollar amount that they actually manage.
It's over 150 billion in assets.
That's all, just $150 billion. I mean, they manage money for China, for US, they manage money for countries. Okay. This isn't your normal financial advisor. It's a hedge fund. So they got some data. They've been doing this a long time. So let's just look right here at what Ray, and this is an updated version. I've done YouTube videos on Ray Dalio's all-weather portfolio. This is updated. Scroll down just a little bit, and what you'll find is his all-weather portfolio right there. Actually, right there. Hold up, right there. Remember what I just said a second ago? Like, listen, sometimes I'm a smart guy, especially when it comes to money, but there are much smarter people than me, like Ray Dalio. So sometimes I just kind of just sit there and I just listen. I'm always willing to learn. I will never arrive and never think I know everything. I'm always willing to learn, unlike a lot of freaking people out there that think that they know what they don't know. But right here, just go back to that right here. So Ray Dalio's portfolio, his all-weather portfolio.
Just a note, this is coming from Dalio's interview with Tony Robbins in Money Master the Game. So it's
how many times do we reference that book, Stephen? We talk about that book because that book has a lot of stuff about the infinite banking concept in it. I think it's section 5.2 or 5.7, something like that in the book. So pretty interesting thing. But right here, it's saying the portfolio consists of 55%. Your advisor would tell you you're crazy if you told them that you wanted to own 55% of U.S. Treasury bonds. It says U.S. bonds, 30% of U.S. stocks, 15% of hard assets like gold and commodities. Okay. Usually they say 10% hard assets and then 5% commodities is what he's saying there. So go down to the portfolio here. Let me just show everybody what this chart looks like. You want to mimic Ray Dalio's all-weather portfolio, then just copy this, blow that up a little bit. And it's kind of interesting. Long-term U.S. bonds, 40%. How many times, Stephen, do I talk about TLT? TLT is an ETF, and I think they're just using that as a reference point. Okay, it's a 20+ year Treasury bond ETF, exchange traded fund. I don't know why I didn't know that was there, but TLT is kind of what they're mimicking with 40%. So that's how they're doing it. Long-term bonds, intermediate U.S. bonds. So we're not done with long-term bonds. We're talking intermediate U.S. bonds too. So we got IEF is the ETF they're talking about, but that's 15%, making 55% Treasury bonds. And then only 30% U.S. stocks, which is the SPY. That's diversification. Gold, he's saying 7.5%, and then 7.5% commodities. So the person that asked, like, how do I invest? I'm not saying this is how you invest. This is just how Ray Dalio is investing with his all-weather portfolio. So that might not be a bad place to start. But then you got to tweak it for your own needs and goals. Just because Ray Dalio says this is his all-weather doesn't mean it's yours. So tweak your portfolio to match this. If you're even more conservative, well, then cut out some of that SPY, which is the U.S. stock market, because that's what's going to get hit the most. So Holly over here, Stephen, is asking what book? Money Master the Game. It's a Tony Robbins book. It's a good one. So I just wanted to kind of point that out and start there because, listen, all the white papers coming out, all the economists that we follow and that we get information from, they're all saying the same thing. Like the bubble's going to burst. We're going to go into a recession. We're going to, and they usually don't say we're going to go into a recession. This economist does, but a lot of them will just say we're going to go into weaker economic times. We're going to go into a correction phase. But basically, at the end of the day, if that happens for a long enough period of time, we're in a recession. If it happens for even longer than that, we're in a depression. Point blank. That's it. Okay. So, Stephen, anything else you want to say on that?
No, I mean, you hit it perfectly. and this is a few years old, so it's one of those things where the market's even changed since this came out, and I'm sure it's been adjusted a little bit. And it's something that we always talk about, staying on top of your portfolio and understanding exactly what's going on and kind of trying to prepare for the future, because there's ways in investing, whether it's real estate, stocks, you can make money in up markets, down markets, level markets. You just have to have the right strategy and know what you're doing with it and stick with it.
Absolutely. Yes, I have so much information in my YouTube channel. Username 22579. My YouTube channel is where we put everything out. I put a video out every single day on YouTube. They're a lot of fun. They're cinematic. We get a little silly on them. So check out my YouTube channel, folks. It's at the Chris Naugle, shameless plug, at the Chris Naugle. Make sure you subscribe to the channel and click the bell so that you're notified every time we put new content out. But yeah, all of this stuff is covered in my YouTube channel. You can go in and search treasury bonds. You can search economics. You can search, how do I protect myself? How do I protect my money in a recession? I mean, I got videos on all of this stuff. At the Chris Naugle, the book was called Money, Master the Game. All right. So what else? Let's see. We got anything over here on YouTube? We just got a lot of people saying good morning. Good morning, everybody on Facebook. Bill, Chris, Paul, Faithful Gal. What's up, everybody? What is the link to that site? Stephen, do you want to put the link to the all-weather? I mean, you could just Google Ray Dalio all-weather portfolio and it will come up. That's a pretty easy way to do that. But yeah, my YouTube channel has all of that stuff. Let's see. Yeah, thanks, Morgan. Appreciate it. I know you watch a lot of my YouTube stuff. Look at the stocks in the... Oh, I got to hit this one. So this one came in from YouTube, and I actually did. It's kind of funny that you mentioned this. I did a YouTube video on this. So what he's saying is, we're always talking about the Dow and we're talking about the S&P 500 because they're the two bigger ones. But if you look at the Russell, and I'm curious as to what you're thinking about the Russell index. So the Russell index is a small cap index. And when you look at the Russell, folks, it doesn't look like the Dow. It doesn't look like the S&P. It actually, up until recently, was actually looking negative. So everything looks positive when you look at the news. The Russell was not looking good. So I did a whole YouTube video on that. But, I just want to know kind of what your thoughts are on the Russell index. But I can tell you the Russell index is probably a more accurate representation of the markets because it does not include the large, manipulated, speculated stocks like the Magnificent Seven, which are all tech-based stocks and AI-based stocks. It kind of strips that and gets to your small companies, which is really, if you think about it, the small companies are, I don't want to say the heartbeat of America, but the growth of America in the future. So if you take a look at the Russell, you're going to get a completely different approach. Check my YouTube channel. I got a freaking video on that. Pretty soon, Stephen, I think I'm going to be able to say I got a video for that. It's just like, because when you put a video out every single day, and I got over 1,200 videos on my YouTube channel, you cover a lot of ground, and you can piss some people off too. Some money will be going into there now. I totally agree. Small caps are more nimble, more easily adjusted to the market conditions. So what he's saying is some of the money from the other indexes is probably going to move into the Russell. So yeah, right here. Here's what you got with the Russell. What's that thing looking like over a 1-year time frame? Okay, 14. Give me a 5-year. 42. Yeah, I mean, that would be typical over a 5-year period. Some of you would look at that and be like, oh my God, 42% over 5 years. That's an average. Okay. That you would have had to have been in it just the period of time that this is looking at, which would have been one of the best periods of time to be in it. Look at a max. Which is probably going to be pretty good. Yeah. 300 cumulative, which is, I did in that YouTube video, I could talk about cumulative returns, but then do a 1 month and a 6 month. So look at the turbulence in the Russell. So if any of you, I know TikTok can't see this, but 10%. But anyway, just watch that YouTube video I did, and it covers the Russell, shows you the perspective of that. All right, Stephen, where should we go from there? Should we mix this up a little bit and talk about mortgage demand, and what's going on in the real estate market?
Yeah, very important right now, especially with the PMC event coming up.
Let me have you. Yeah, we got this Inner Circle event here starting tomorrow. It's a very small event because we just can't house tons of people, and we want to do some cool stuff. So we just couldn't bring a lot of people, but there's like 30 people coming in. It's going to be wild. And we're going to be talking about lots of these topics. But Stephen, let's dive into real estate and some of the stuff in the headlines. Mortgage demand drops as home buyers wait for lower rates. What is that telling you?
Yeah, we just hit it. The average contract interest rate for 30-year fixed decreased to 6.82% from 6.87. So still hovering right around just below 7% where we've been for quite a while now. You know, a lot of people are just kind of holding it out. They're saying, hey, we're going to wait till the market drop, or wait till rates drop before we make any moves. And houses are just sitting right now. Nobody's really making any moves right now. So applications for a mortgage to purchase a home still dropped another 4% last week compared with the previous week. Applications to refi were essentially flat, 0.3% for the week. So kind of hovering right along where we've been now for, I don't know what, the past, I feel like all year really, right, Chris?
Absolutely. Yeah. So, I'll make a prediction. I mean, some of you might already know this, but September, the Fed meeting in September where they got to decide, are they going to keep rates higher, lower? What are they going to do? Mark my words, they are going to drop rates. That's going to be the start, not the end, but the start of the Fed starting to decrease rates. You'll start hearing them talk about how they slayed the dragon and they got inflation in control, that bad inflation that they created. Make no two ways about it. Like I don't want to hit this one hard because this is where you start pissing people off. But the Inflation Protection Act, I mean the Green New Deal, or what was it? Was it the Green New Deal or the Inflation Protection Act? Like, oh, I'm sorry, they're the same freaking thing. Oh, I forgot all about that. It's like the Inflation Protection Act. I don't argue anymore because an eagle doesn't, go after a crow that's attacking it. An eagle just keeps going because why would it waste its time with a crow? But I get a lot of haters that sit there and try to tell me that the government, i.e. the administration, because we got to kind of define that now. People can't really figure that out, that the government is the reason inflation is coming down. The government and the Inflation Protection Act had nothing. And I literally, it probably hurt the inflation numbers. It probably made the inflation numbers stay higher for longer, as Jerome Powell said. But the Inflation Protection Act or Reduction Act or whatever the hell they called that thing, the Green New Deal, did nothing at all to reduce inflation. And that is a fact. And I will argue that and fight about that all day long. But we're not going to fight about that here. So when you really think about inflation, one of the couple reasons inflation has been coming down is because the Fed increased interest rates, okay, very quickly and very aggressively, and also because they unwound the balance sheet. These are two tools the Fed has in their monetary policy, like control. They can do lots of things. They can basically issue the printing of new money through the Treasury. They can increase or decrease interest rates, which is usually the first line of defense. They can control money flow and the amount of money in circulation and the amount of, you gone to a bank lately? Have you tried taking a loan from a bank lately? It's freaking very difficult to get a loan. A lot of real estate investors are feeling the pinch on that right now because they're not able to refinance their property. Syndications. Any of you invest in syndications, those big fancy commercial blown out of proportion syndications? Yeah, a lot of them are suffering massively because the value of their portfolios are coming down. They can't get the refinance to take out the investors like they told, and they're having a hard time meeting their pref returns. Like you're seeing this across the entire industry. And this is just the beginning. It's going to get way worse because banks are going to freeze up even more. And that's exactly what's going on to me in the real estate market. But the reason you're seeing, and kind of like what Stephen was saying, the reason you're seeing real estate still be pretty aggressive or pretty hot is because people were not selling their houses. Why would you sell your house when you got a 2 or 3% mortgage to go into another house at 8% at a higher price? It just didn't make any logical sense. But now that the Fed has literally kind of drawn the line in the sand saying rates are going to probably come down more than likely in September, because of that, now you're starting to see people, okay, well, now rates are going to come down. So I could start looking at that. They're looking at 6% interest rates in 30 years. They're like, it's not that bad, but you're starting to see this froze up real estate market free up. And as rates come down, it's going to make a lot more people eligible for mortgages. But the problem is, and the one thing that just doesn't ever seem to get talked about, is all of this is going to absolutely bring the price of real estate down. It is, because the price needs to meet the demand. And right now it's out of whack. So price needs to meet demand. Interest rates will help soften that, but we're not going to see it come down where it was. So you're still going to have a little bit of a freeze up in the real estate market for a little bit longer. And then when the market gives way, and like I mentioned earlier in the show, when we start seeing, the market softening, we start seeing the economic conditions slowing, which we are right now, and we enter a recession or go get closer to a recession, people will lose jobs. People will get laid off. It's already starting to happen. You just don't, of course, you're not going to see it in an election year. Silly. Well, why would the news print that in an election year? Okay, you wouldn't. But all this stuff is stuff to consider. And, if you're looking at selling your house and you're like, oh, maybe I'll wait because the price is going to go higher. Don't wait. That's the only advice I can give you on that one. All right.
Yeah, there's ways to work mortgage rates. I mean, we talk about it all the time. We have an event coming up. We're going to really hit on it hard in August, our virtual IBC 2-day event that we have coming up. We're going to hit on. But when you look at the velocity of money and paying mortgages, I mean, we have different strategies where, even paying a 7-8% mortgage, you can get that thing, pay less interest than a 2 or 3% mortgage if you have things set up properly on the side. So we'll teach some of those strategies. So it's not always a reason to not make a move just because of the higher rates. And when we look at overall, something, Chris, that I think is interesting is, besides getting the economy moving, everything like that to drop rates, the U.S. is going bankrupt right now. I mean, right now this year, interest payments on national debt are going to shatter $1.14 trillion this year, which, just to put that in perspective, that's eating 76% of all income taxes that were collected. So 76% of all of the income taxes that we all work so hard to be able to pay, on top of all the other expenses in our life, so much of our money goes to taxes and especially income tax. 76% of income taxes this year are getting eaten up by interest. What is interest? It's bad decisions by the federal government over the last several years. So because the government's made all these bad, horrible spending decisions and just shot our national debt up past, what are we at, 34 trillion, with 1.14 trillion just in interest payments this year alone, just boom, those bad decisions are just all of our hard work's going to it. So it's just, we're coming to this head where something has to happen. Like you said, it's an election year, so it's not all going to come out, but there's going to be hard decisions that have to be made. And that's all going to, you look at the stock market, real estate markets, all the markets, that's all going to come into play at some point in the future.
So over here on Instagram, I don't know how to say it, but Kala Luke had a question. He said, what if people take some, not all their money out so that we don't have another Great Depression? I mean, that's a logical way of looking at it. Like, but that isn't really what a Great Depression would be. So that if people take their money out, and I don't know what you mean, take their money out, but take it out of the stock market, take it out of the institutions, whatever, that wouldn't stop another, recession or another depression. It really comes down to a component of kind of what Stephen said. Like if you're looking at a Great Depression, number one, the biggest thing that would lead us to the next Great Depression or another depression would be a lot of things. It would be the number one, bad monetary policy by the Fed, which, are they going to print money, which is what they've done. But every time they print money, okay, this is the important thing. Every time the Fed prints money, it weakens your dollar. So you're devaluing the currency, the dollar, which is the number one currency in the world, the currency that values oil up till now. Okay. But you got to really look at it is how much more money can the Fed print? But the Fed doesn't really have a choice. Okay. Because the Fed has to print money, or I should say the Treasury has to print money. The Fed has to authorize them printing more money just to keep things going. And listen, make no two ways about it. No matter who gets in office, whether it's Trump or Kennedy or whoever on, Kamala, I guess right now would be the word. None of them are going to stop spending money. They can't. They're actually probably going to spend more money. So in spending more money, it's going to increase the deficit. So now the couple things, I mean, This current administration thinks, okay, well, let's tax the rich, which they're not. Okay. If any of you think that's what they're doing and that's the solution, that isn't the solution. That isn't what they're doing. They're not going to tax their buddies who are donating to their political campaigns, but they're going to tax the middle class. You're the culprit. You're the one getting taxed. Pay attention to your tax returns. Last year, your tax returns went up. This coming year, they'll go up. Does anyone think their taxes are going to go down? I know Trump is saying he's going to eliminate taxes, but in eliminating taxes and things like that and reducing income tax for corporations and everything else that's in the campaign, do you understand that the taxes, they're not going to bail the U.S. out of this debt? Okay, they might help keep pace, but the biggest thing, and I hate to keep saying this, but again, I just did a YouTube video Monday on this. We went back and we looked at oil. Okay. And we looked at oil as a solution. Could oil, in being energy independent, help the U.S. get out of debt, or at least minimize their debt to respectable levels, which would be about 70%, maybe 80% of GDP, not 120, not 130% of GDP, that not even sustainable. Could oil bail the United States of America out of the debt? Could it pay down the deficit? Well, the answer is absolutely. It couldn't pay it all off, I don't think, based on our numbers, which obviously there's way more into it, but we just did some rough calculations in that YouTube video. So if we took the United States to a point where we were energy independent, where we produce right now, and I want to give some credit to this administration is producing more oil than any other administration in history. But it doesn't mean that that's good. They're just producing more oil. That oil is all being shipped outside of the U.S., okay, which should be helping to pay down the deficits, but I don't know why it's just not. But taking the U.S. to be energy independent, which is something that Trump is saying he's going to do, and it's something he did last time or got very close to doing it with the Keystone Pipeline, which immediately when this administration came in, they shut it down. And that resulted in almost 30,000 higher paying jobs being eliminated with the stroke of a pen. I just want to point out the facts here. I'm not trying to get political, but that was a fact, and you all saw that happen. I'm not saying energy's clean. Energy's got a lot of cons, but it has a lot of pros, and you got to weigh out the cons and the pros, the good with the bad. But let's just kind of get outside the U.S., outside of U.S. politics, and let's just look at a place called Dubai. Any of you ever seen Dubai? Any of you ever seen what that looks like? It doesn't even look real. You would, if you looked at Dubai and you'd never seen it before in your life, you would think it was an AI generated drawing. You would think this isn't even real. Oh, folks, it's real. I have friends that live there. I have lots of friends that live there. Guys I went to school with live in Dubai. I can tell you it is everything that you see. But here's a couple of unique things. In Dubai, do their citizens get taxed heavily? No. Oh, no. Matter of fact, if you're a citizen, and don't mark my words, and I don't have factual data to back this up, I believe you get a check. Where does that money come from? Where does the check you get from the government come from, or whatever you call it over there? Oil, folks. Everything in Dubai, everything Saudi Arabia comes from oil. If they can do it, why can't we? And some people would say, oh, we don't have enough oil. Saudi Arabia's got more oil than us. Bullshit. We have more oil here. Read a book called The End is Just the Beginning. You will learn a lot about geopolitics, but you will learn a lot about the United States of America and the resources we have right underneath our feet that is always stopped by bureaucrats. And really, it's just determined by whoever's in office. We have more resources under our feet than anywhere else on earth. And I don't know that to be fact, but it's pretty freaking close. So we could be energy independent. And if we became energy independent, if we could get our refining capacity where it needs to be? Right now, we have the ability to produce crude, but we don't have the ability to refine that crude into a usable oil, some type of oil derivative that we can actually use to fuel our cars and everything else. But we could get there if there was an effort put in. There's just been an effort on the green energy, which is not green at all. I mean, just look up how batteries are made. I shouldn't need to say nothing else. They are not clean. And I'm not saying energy or oil is clean either, but when you really weigh the two out, is it really the better of the two evils? I don't know, but there's a mix. There's a place for both. We don't need to be all energy or all oil and all EV. There's a place for both. If we became energy independent, if we did it the right way, that could be a path through the debt that this country has, which will bring the United States down. The debt, and listen, I know we're talking about U.S. debt, like the nation's debt, the corporation called the United States of America's debt. But listen, like, I'm not leaving any of you out either. I know the stats. Done the YouTube videos on this too. I know what American citizens' debt load looks like, and it's worse than it's ever been. Those credit cards are out of freaking control, and that will bankrupt you, just like it will bankrupt the United States in time if we don't control this. So, I mean, all that stuff put into place.
Chris, real fast, and that's why it gets me confusing when you see a presidential candidate that comes out and says we're going to ban fracking in the United States of America, which produces so much oil, and to your point, so much financial opportunity, and coming out and saying, hey, in the next 11 years, we're going to get rid of all gas vehicles in this country, or the production of new gas vehicles, and go all green energy. And I know, but these are things that Kamala Harris has said, and she's now the Democratic nominee for the United States of America. And I just don't understand, why, unless they purposely want to make sure we stay slaves to debt, whether that's personally, whether that's as a nation. I mean, if you look at this debt clock, we're actually at a pretty exciting moment. I mean, we're very close to $35 trillion in debt, and that is just screaming fast. So,
but it's not just the debt clock that you're looking at. Not just the important thing is not the debt. The important thing is each citizen, each tax-paying citizen, how much does that debt make up of each tax-paying citizen? It's over $200,000, right? $267,170 per tax-paying citizen in this country. We got a lot of citizens or illegal immigrants, if you will, not paying taxes in this country, because if you look at it and you just say per citizen, it's 103, but per tax-paying citizen is 267,000. Can you guys do the math? Can you understand the problem there? There's a lot of, I'm not going to swear, but a lot of people not paying taxes in this country. And who are they? Yeah, I'll let you figure that out. We got a little border problem here. And I want to get to some questions here, but there's two that came in. One on Instagram came in. Blaze Vincio Official, sorry if I butchered that, said, would it be better to purchase gold, precious metals, and let them sit and appreciate in a bank? First off, if you bought gold, you wouldn't hold it in a bank. You would hold it in an institution that is, to hold gold. There are warehouses and places where you can actually have them hold and basically, keep your gold safe. Or putting money into the banks. Well, I certainly, if you know anything about what I teach, I certainly wouldn't say keeping large amount of money in banks is smart right now. Just curious. Plus, don't necessarily trust stocks. It's a slippery slope. And also he said, because we can't control the markets. You're absolutely correct. We have no control of the markets. We can't control what the Fed does. Literally, like, I have found pure bliss in this statement. This is a serenity prayer. God, grant me the serenity to accept the things I cannot change, the courage to change the things that I can, and the wisdom to know the difference. Very important that you understand that, because we spend too much time focusing on things we have no control over. And we spend very little time, there's cash. We spend very little time on the things that we can control, which is what we should be spending 100% of our time on. But getting into that, like, let's come over here. The answer to that question, I'm not dodging your question like politicians do. The answer to that question is, I don't really know the best place. I can tell you where my money goes, and that is giant mutually owned life insurance companies that pay dividends. That is it. And I do that through specially designed and engineered whole life. And to me, that is the soundest, safest place for my money to go. But you don't need to take my word for it. Tony Robbins talks about it. Robert Kiyosaki talks about it. The Rothschilds and the Rockefellers, two of the wealthiest families in the world and throughout history, they keep tons of their money. That's why you don't know how much they're worth. And you could go right through for Disney, and you could go through Ray Kroc, and you could go through history. You could go to the sitting, well, yeah, I guess he's still the sitting president, Biden, and look, they are all using giant mutually owned insurance companies. So where do you keep your money? I don't have a direct answer as to say this is the best, but that's what I do. And it has worked very well for me. Stephen, anything you have to say on that?
No, I love it. I just posted a link over there. If you want to learn more about why we store our wealth in mutually owned, massive mutually owned life insurance companies, I put a link over there so you can watch a 90-minute video and schedule a call with our team. It's all free of charge, just like this show every single week, just like our webinar today at 1 p.m. Eastern. We're going to show you why large corporations use mutually owned whole life insurance companies to store their wealth, and how they do that with their key employees, how they do that to create entire systems, same as banks do. The largest purchasers of these mutually owned whole life insurance policies are actually banks. Banks purchase more whole life than anyone else in the world. So we're going to teach you that at 1 p.m. today on the Wealth Webinar Series. Go over to chrisnaugle.com and you can register for that for free. And actually, on top of that, Chris, we're going to give out 3 of our best books. Let me show you these while I got them right here. So when you register for that webinar, we're going to give you this one, Drifting Away from Traditional Car Buying. Chris mentioned he puts his money into whole life, but he also didn't mention that he also puts his money in Porsches. So why does he do that? Because he can get all his money back. So you're going to get that book for free, Mapping Out the Millionaire Mystery. This thing is a solid book that's helped literally thousands of people over the country over the last several years. Get this book digitally for free as well. And if you like real estate, and you need to learn how to work outside the banks to borrow more money, or how to safely start lending money to real estate deals privately, just like banks do, securing your money in a first position, getting solid, consistent returns. You're also going to give you this book, The Private Money Guide. So go over to chrisnaugle.com, register for today's webinar, and we'll get you all 3 of those books as well.
So there's a couple things. I can't believe time flies by this fast, but I guess I did do some rants here, Stephen. There's a couple things I do want to hit on. I want to talk about Ray Dalio and some of the predictions he's making, based on historic data only. It's right here in Business Insider. Ray Dalio, U.S. on the brink of civil war, but not one where people grab guns and start shooting. So, but before I do that, I want to do something that I think is really important. And I want to remind everybody that we live in the United States of America. And according to what I know, and I don't know everything about every other country, but this is the land of the free, the greatest country on earth. And make no 2 ways about it, I believe that to be 100% true. There is nowhere else in the world that I would want to live more than the United States of America. I think the United States of America is beautiful. I think it provides opportunities nowhere else on earth does. And I also think one of the most important things about living in the United States, at least as of today, in sitting where I am, we have the ability to freely communicate. We have the ability to freely say what we want. We have the ability to free or speech, and we have the ability to the freedom to vote for who we want. We got an election coming up in November. Whoever you guys want to vote for, that's perfectly fine. Like, I don't care who you vote for. I'm voting for Trump. And I don't give a shit what you think of that, but that's why I live in the United States, so I can vote for who I want. I have followed Trump's career since I was a young boy. I've read all of his books. I love The Apprentice. Like, there's just a lot I like about the guy. You don't have to agree with me. That's perfectly fine. Like, we can agree to disagree. We don't need to argue about it. And a matter of fact, Ray Dalio talks a lot about that, which is why I said that. Vote for whoever you want. You want to vote for, Kamala. You want to vote for Kennedy, which I think Kennedy's awesome. I truly like Kennedy. I've always liked the Kennedy family, and it's a shame. To be honest, it's a damn shame that Kennedy isn't running for the Democratic seat, because I think he would have been an amazing choice. But again, I don't control that. Serenity prayer, just can't control that. But nonetheless, I'm voting for Trump. Love it, hate it, don't follow me ever again, don't do business with me. I don't care. But that's the thing. That's the problem in this country. And when Ray Dalio talks about we are on the brink of a civil war, do you know why? We are on the brink of civil war for exactly the reason I just said. We are divided. We have literally taken something that we have no control over, and that is something that is a freedom of living in this country, of who we want to vote for, and we have turned it into a fucking weapon. We have literally weaponized the freedom of speech. We have weaponized the freedom to vote for whoever we want to based on what we think is right for the country and for our lives. Now, some of that is selfish. Some of the reasons I'm voting for Trump are selfish. I don't want to pay a lot in taxes. I don't want government to have control. I don't want the government or Kamala to tell me I'm here to help. The government is here to help, because Ronald Reagan back in a speech said one of the number one things to listen for as a trap is when the government says we are here to help. I've lived 46 years, soon to be 47 years on this earth. And I can tell you one thing that I've learned in 46 years. The government isn't here to fucking help you. You need to help yourself. And there's a lot of ways to help yourself. Giving, is one of the biggest things. The best thing in my day, the best joy I get in my day is working on my foundation, depositing money in our nonprofit foundation so that we can give and give as much as we can. And I give a lot. Okay. And I'll give more and more the older I get and the more money that I have, I'll give and give and give because I find joy in that. Okay. Whatever you find joy in, that's what you should be doing. But I can tell you something. The government is not here to help you. You might think they are because they make promises to you. And listen, and I'm not saying Trump isn't making promises that he probably won't be able to keep, but there are a couple things I know he will fight really hard to do. And that will be to protect our freedoms in this country. And another thing that he will do is I truly believe he will do what he can to bring the U.S. to be energy independent, which I think is a very important thing. And I think that, and Ray Dalio, he doesn't take a side politically, but I think that is definitely one of the things. Now, real quick, Stephen, in this final rant, if we can pull up Business Insider, and I'm ignoring all the comments because I'm sure there's lots of hate coming in, but let's just talk about a civil war. How many of you have studied, what you all should have because you went to school, right? And you learned about the Civil War. That Civil War was an awful one. It was a bloody war. And there's a lot of things that made that Civil War happen that are very different than today. But when you hear Ray Dalio talking about this, there's nobody, in my opinion, that has studied history from a financial aspect more than Ray Dalio. He's written books, he's created videos, and you should read all of them. And by the way, if you read the books, please read the white papers. The truth and the real meat of Ray Dalio's teachings is in his white papers. But if you scroll down to this and you look at his definition of this, now he's not talking about thinking that we're going to go into a civil war where we grab guns and we fight. Now, he's not discounting that could happen. He's actually saying there's a better chance of us entering a world war, which I wouldn't disagree with that either, more so than us grabbing guns and killing one another. But what he's talking about is he's talking about a civil war where it accelerates the political polarization, which sound familiar, like a little bit of polarization going on with the political environment. And people move to different states that are more aligned with what they want and that they don't want to follow the decisions of the federal authorities of the opposite political side. Did you hear what I just said? These are Ray Dalio's words. It's right there. You guys can read this. Has that not already happened? During the pandemic, did not a lot of Americans move to Florida and other states because they didn't like the politics, the controls of New York? I'm one of them. I did not move, but I didn't move because my mom is here. And I love my mom, and I'm all she's got. And you know what? I will stay in this shitty state. It's a beautiful state, but it's a shitty political state called New York. A lot of people move from California to Texas. You already saw this happening, folks. That is one of the things he's saying, that are more aligned with what people want and that they don't want to follow the decisions of the federal authorities, because there is very big difference from Florida to New York. And it is from a political standpoint, from a federal political standpoint. But let's look down here at one more. Scroll down just one more. Ray Dalio pointed out several critical factors that he believes are contributing to the nation's precarious position. He uses big words. Extreme levels of government debt. We already talked about that, didn't we? Extreme levels of government debt. Significant wealth inequality. This country has a massive wealth gap, that which rivals any other nation throughout history from a wealth gap standpoint. And that is never good, because the wealth is sitting here, and everybody, there needs to be wealth distribution. I'm not saying that we shouldn't have wealth distribution, but it shouldn't just be handouts from the government that come on the back of taxpayers. And I stand in and I support that message for sure. Rising internal political rifts. You can't even go out and speak your mind. Like, you can't even go out and tell people. Like, people are scared to literally say who they vote for, which is why I'm telling you who I'm voting for. Like, you can tell me, I'll tell you mine. You tell me yours, and cool. We can be friends, or we don't have to be friends. I don't care either way. And you shouldn't care either way. It doesn't matter. But that's what this is all about. The rising internal political rifts. There is so much divide. Like, I don't know, depending on what you listen to, but some would say it's 50-50. I don't truly believe we're there yet. And ongoing external conflicts. Russia, Ukraine, Israel and Hamas, all these things. I mean, now you got this Iran stuff going on, like all these. And he goes on to say, we are now, and this should scare the shit out of all of you, and I know we're a little over time, actually 1 minute from that. We are now on the brink, and we don't yet know if we will cross over into a much more turbulent time. Dalio stated emphasizing the urgent need for attention to these issues to prevent potential disaster. Potential disaster. Not in this article, and I think it may be in this article earlier on. He talks about there's better than a 50% chance of a world war. Like a civil war, world war, all brought on by us just not being able to get along, us being so polarizing in so much hate because somebody's voting for the person that you're not voting for. It just blows my mind. I can tell you right now, as Chris Ash here said on YouTube, though, if this country was brought to energy independence, if it was done the right way, if we started focusing on refineries, which again, Morgan Sharp said there are refineries sitting vacant that could be updated and put into production all over the United States. But you can't in this political environment. Okay. The Green New Deal, the Inflation Protection Act. Can't. Thomas said, well, actually, I'm not going to get into that one, but basically he's kind of just saying Trump needs to do what Elon did. I don't want to make this too much about that. Not many refineries built in the last 40 years. Don't vote for anti-frackers. I mean, a lot of stuff coming in. Be your own bank, Morgan said. David and Dorothy said, what's going on here? TikTok's doing something. Verify to continue. Drag the puzzle pieces. Live will end. Oh, see. Yep. So now I'm being, I said something naughty. I said something bad. Don't know what I said bad, but yep, that's it. TikTok's done. Unable to verify. All right. Anyway, who cares? TikTok's, well, anyway, there we go. Yeah. Neil over here on TikTok said, look at California. I thought TikTok was getting rid of me. Have to run. Thanks. Enjoy you being on there. But so lots of great comments coming in, lots of good stuff. But like literally, like folks, think about that. You know, we need to be united, not divided. And that's the only message we should all be focused on. Now, I'm not saying that's going to happen because it probably isn't. You know, I've seen things, you know, just in the last couple months that just, I don't know what else to call it other than Satan's been fucking busy. It's the only thing I can call it. The hate in people, just because somebody's voting for the person that they're not, just because somebody's sitting there waving a flag, like the hate, that to me, that is Satan at work. And I don't know what else to call it. So you guys can all call it what you will, but I know we're out of time here. And I don't want to say much more, but just remember like where we're headed. Just know where we're headed. We're headed there and it can be stopped, but we need to come together. We need to not divide. We need to come together. And I just don't know if that's even possible, but it could happen. It could happen if we had the right leader that was to pull us together. But right now, like none of the candidates, I don't think they can because they wouldn't win. It's a scary freaking time. So I don't know what to say. My vote goes to Trump. That's what I'm going to say. What do you got to say, Stephen?
I love it, man. My flights are delayed, so I'm going to deal with this and see how I can get up to Buffalo somehow or another today. Other than that, good show today.
We didn't even hit on the chaos going on in the airlines just because Microsoft had a glitch or whatever the hell they call it.
Some kind of, wild, man. Wild stuff.
Yep.
Nice.
I think everybody, tonight, right before you go to bed, put your knee on the ground, put your hands together and just pray. Pray for somebody that needs that prayer. Pray for yourself. Pray for your family. Pray for the airlines. Doesn't matter. Just pray and just continue to do that every single day. And I think that will help many of you because if we can just bring God back in and that'll help push Satan out, I think that would be a good start. But with that being said, folks, thanks for joining us for another episode of What the F Happened. We will see you this afternoon at 1 p.m. for the Wealth webinar. Till then, have a good day.